Senior Minister Security Cluster Datuk Sri Ismail Sabri Yaakob says the CMCO in Kuala Lumpur, Selangor and Sabah and several localities in other states has been extended until December 31st. For Selangor, the CMCO will be extended for the whole state except Sabak Bernam, Hulu Selangor and Kuala Selangor, which will be under the RMCO. For the other states, the CMCO extension will involve Southwest Mukim 12 and Northeast Mukim 13 in Penang, Ipoh and Cemor in Perak, Seremban and Port Dickson in Negeri Sembilan, and Johor Bahru, Batu Pahat and Kulai in Johor. However, the government has also agreed to give leeway for the reopening of the tourism and cultural sectors in the areas under the CMCO effective tomorrow. Ismail Sabri said the reopening involved 4 aspects, namely meetings, incentive travel, conferences and exhibitions, tourism products, cultural and heritage exhibitions, as well as theme parks, family entertainment centres and indoor playgrounds. However, the number of attendees and visitors are limited to 50% of the premises space, with physical distancing applied. Meanwhile, stage performances are also allowed, but without the presence of spectators. Former Deputy Finance Minister Datuk Ahmad Maslan has failed in his third attempt to get the prosecution to either reduce or remove his charges of money laundering and providing false statements to MACC officers. The Pontian MP had allegedly failed to state his real income after receiving 2 million ringgit in funds said to have originated from 1MDB from then PM Datuk Sri Najib Razak. Deputy Public Prosecutor Siti Nur Hafizan Zakaria told Sessions Judge Ahmad Kamar Jamaluddin the Attorney General Tan Sri Idris Harun reviewed Ahmad's third representation and decided to reject it on October 5th. The court fixed July 5th to 8th, 12th to 15th and 26th to 29th, 2021 for the trial. For failing to state his real income, Ahmad could face a maximum 5 million ringgit fine or jail for up to 5 years or both upon conviction. As for giving false statements to the MACC, the politician is looking at a maximum fine of 3 million ringgit or a maximum jail term of 5 years or both if convicted. The family of former Lembaga Tabung Haji Chairman Datuk Sri Abdul Aziz Abdul Rahim have failed to get a stay against the prosecution's move to gazette a notice of forfeiture involving 16 million ringgit from them. The decision was made by Justice Datuk Muhammad Jamil Hussain after hearing submissions from Abdul Aziz's family. The judge said there were no special circumstances for the court to grant a stay in the forfeiture proceedings. Furthermore, he said, the defendants did not file any affidavits in reply, and so there is no issue of disclosure, which the defence say would prejudice this criminal case. He fixed March 26th for the court to gazette the notice. The prosecution had named Abdul Aziz's family and family-linked company Azira Management Consultants Malaysia as respondents in the case in a bid to recover the 16 million ringgit. Azira Management Consultants is one of the companies said to be involved in Abdul Aziz's corruption and money laundering case, where he is standing trial with his brother Datuk Abdul Latif Abdul Rahim. The former Tabung Haji chairman's wife and children are said to be directors of the company. Public Invest Research has downgraded Topgolf Corp to neutral from trading buy and lowered its target price to 7 ringgit 30 from 9 ringgit 70 as concerns remain over its environmental, social and governance-related issues. Analyst Chua Siu Lee said in a note that she didn't discount the fact that Topgolf and its peers will continue to deliver record-breaking numbers in the coming quarters. This as average selling prices are expected to increase by another 30% quarter-on-quarter in the second quarter of FY21. However, she says with the ESG issues uncovered recently, Public Invest is incorporating a 20% ESG discount to its valuation of Topgolf from a PE multiple of 10.5 times to 8 times. Over the past month, Topgolf has been under an uncomfortable spotlight following accusations of cramped living quarters and a severe COVID-19 outbreak at its factories, which led to a death of a worker. Pekka Group says it is actively looking for M&A opportunities and that it expects to conclude a deal in the first quarter of next year. Group CFO Fu Kenny says that its search was put on hold due to the MCO, although it had already initiated discussions before the lockdown. According to Fu, the deal is related to its core business, which involves automotive leather upholstery, and that it hopes to expand its overseas business via M&A. For FY20, revenue from overseas markets came in at 17.5%. Looking ahead, Fu says Pekka is positive on its outlook, as its capacity has returned to pre-MCO levels and is poised to deliver more automotive leather seat covers in FY21 for both existing and new car models. Pekka supplies leather car seat covers for Perodua's Myvi, Aros and Beza, as well as Proton's Exora and newly launched X50.